All right, the boys are back in town. Palantir Weekly, number 80.
Is it
Matt
80?
Money is with me. With the correct Twitter link in the bio, by the way. I posted a bunch of clips from our podcast, and in the description, I was like, follow Matt on Twitter. And then you click on it, it's like my profile. And I was like, oh, shit. This looks so narcissistic. It's so bad. So
it was unintentional. I knew that. I thought it was funny.
Yeah, I fixed those. So definitely everyone needs to go follow Matt on Twitter. And then we're here with Arnie, author of PalantirBullets.com.
Hot Arnie.
Just crossed 7,000 followers on Twitter, which is absolutely amazing.
Congratulations.
Matt's about to cross 6,000. So it's cool, man. We were just a bunch of kids a year ago talking about Palantir, and now we kind of have audiences.
Just a bunch of guys that people thought were degenerates.
Still
are degenerates, but
yeah. All right. So got a lot to talk about. I think we'll get into the first. What? Why are you laughing?
You're already tired of my shit.
What did you say?
You're already tired of my crap.
Oh, I'm already tired of your crap. Oh, no, I'm always tired of your crap.
Never tired.
Okay, so I think we'll get into the biggest news of the week, and then we'll just see where the conversation goes from there. We didn't do Palantir Weekly last week, so I do have some stuff to talk about in regards to the Lewis Mosley interview and stuff like that. But let's start off with the fun news. Palantir sponsors Elina Svitolina, who's a Ukrainian tennis star. This is our first sponsorship we ever gave. We thought it was Tom Brady. That didn't actually happen, but it was pretty cool. So we picked a Ukrainian tennis star. I guess we'll start off with you, Matt. Raw thoughts when you saw the sponsorship, and then we'll go to Arnie.
I thought it went hand in hand with what was going on. I mean, I think it's prudent to get involved. I mean, you think about it. I think a lot of people don't realize how much time and energy goes into a lot of these professional athletes, whether it's management, whether it's physical training, so having a lot of this backup that might be able to put a lot of her, I guess, analytics and stuff like that within Palantir might be something that's pretty useful. And it might end up being something that we continue to see. We've already seen it in sports like F1. So why wouldn't we see it in other sports? Keeping track of things. It goes along with keeping track of inventory at whatever that collectibles company was last year that signed into getting revenue from Palantir as well. So I think it's all in the same realm of things, and I think it fits well with the current agenda that's going on with Ukraine. So I welcome it. I don't see there's any huge negatives associated with it.
Okay, Arnie, your thoughts?
Well, I would say first, nothing new, because we already had a hint from a picture Coach Investor shared almost a month ago. So again, it is really impressive how captive we are in spotting clues. And in this case, the clues were just confirmed by a great news, because what's happening right now is Palantir knows they have a very strong product, but inevitably, it is still true that the perception on them is not that nice. Actually, just a couple of days ago, I've been written by a guy telling me, look, the company where I work in was considering using Palantir. They made a 5-minute Google search, and then they saw spyware, Trump-backed, all the usual bad things that we were used to discuss. I realized, okay, despite this is not true, it can truly have an impact, and I'm kind of sorry it still has an impact despite the crazy amount of good things that Palantir is delivering, the value it is unlocking. So I think these kind of sponsorships are just one step in the right direction. It will be painful, it will be slow, because you don't change 20 years of reputation overnight. But certainly having a very good association with values they truly believe on, and we see that is not only words, but even on the battlefield. I am extremely enthusiastic about this.
Yeah, I mean, it makes a lot of sense. I think the biggest thing is, if the war is starting to end in Ukraine, and we're getting into the reconstruction era, then there's a lot of money. We all saw the Financial Times article with BlackRock and JP Morgan funneling what I think is a couple $100 billion into reconstructing an entire country that's been war torn. There's a lot of stuff they have to do, get them back into the international markets. And so as a result of that, that's a big data problem. you could argue, given Palantir was named with the Ministry of Digital Information as their partner, that a lot of that money should be flowing into them, and maybe that is the byproduct of all the software we gave that to them to them for free as well. I also think, the quote she gave, even if the quote was architected by Palantir, right, and she just took the money and said what she ever she had to say, the quote seemed kind of genuine to me, which is that Palantir is keeping us free. I mean, when was the last time an athlete was sponsored by a company and the reason for the sponsorship wasn't money, or wasn't like, oh, Nike and Adidas are cool? It was like, hey, I'm proud to wear their logo because they're protecting my country's right to exist. That's a pretty big deal. And I think the byproduct of this as an implication is that, as you said, Arnie, all the negative perceptions of Palantir slowly have to fade away when these big athlete superstars are associating freedom, peace, democracy with a company versus evil, Trump, spy, all that stuff. And hopefully that helps us expand in Europe a little bit more than we are right now. Let's talk about last week's news with the NHS, and then we'll get into some of the other news happening this week. So Lewis Mosley went on Bloomberg and basically was asked about if we're going to get the NHS deal, and he said he can't really comment on that. He said, so that was the first thing he said. The second thing he said was international government defense spending is increasing, and Palantir is getting calls to come up with some answers for those questions. And that's all the specifics he went into. So Matt, we'll start with you. What were your raw thoughts on that interview? Anything new you took away, or you kind of think we're just chugging along with getting some more of these deals?
I think it's chugging along a little bit. I mean, I think that's a good way to put it. I think from what we've seen, we know that they're building a database that is basically going to be a piecemeal part of eventually whoever does get the NHS deal. So it's like, well, is that, you could take that two ways. Is that a winding down of Palantir to eventually hand over the reins to somebody else, or is that a continued consolidation and in an effort to push Palantir forward for the NHS deal? But I think it's the latter part of your question, which was specifically focused around UK government work and stuff of the like, I think is just another stepping stone in the foundation of what we've been seeing with what's been going on in Ukraine, what's been going on with the US government revenue contracts that we've kind of seen coming out. And we're all essentially, I mean, let me take a step back. Ukraine isn't necessarily part of NATO, but we've basically been treating it like it is in that respect. And so with that, I think it's just another piece to show, okay, NATO, we're aligned countries, we're all trying to do the same things. If we are all allied and we all try to believe that the West is, and trying to make the brand of Palantir making the West free and hoping that continues, why wouldn't the UK continue to be on board, especially with the progress we've seen with the NHS? Even though we might not have the big deal as of yet, they've made great progress that they've stated with the pandemic and also the vaccine rollout, and then coupling that with what we've seen in the US government efficiencies that they've made. And so I think it's just another stepping stone in the right direction for what I believe is a long-term runway for Palantir in all of Europe and potentially other US allied countries.
Okay, Arnie?
Well, I think in the clip you shared, you summarized the whole video very, very well. So what about the NHS deal? Will we get it? Maybe. I can't say, but give a nod. Well, I can't say. I can't say that.
I can't say it. Yes, I can't say it.
So I like body language, and I like to speculate on body language. The body language give me a positive hint. Now, this is clearly speculation, but it's speculation backed by the fact that in the same way, Louis Mosley says, okay, we have been working in Ukraine for 18 months, and now people are opening their eyes. They're seeing what works on the battlefield, what doesn't. Now people are calling us, hey, I want this stuff too. At least the conversation is on. And I think everything is connected. The recurring theme with Palantir is if Palantir keeps unlocking value, things unlock in the right way. There is friction. There is a crazy amount of friction, I would say, especially for the NHS. But I would say we have little hints like the small NHS contract that the NHS gave to Palantir to transfer basically all the work that has been done up to now with Palantir to the federated data platform. And from what I know, it is not that easy to actually transfer all the work you do in Palantir to another platform. Maybe Matt can gives us some hints about this, but my perception and from also what I learned, Palantir wants you to build stuff on top of it, because once you build stuff on top of it, is very difficult to move. Obviously, you can do it, but let's invert the question. If you are the NHS and you have been training your people to actually use a platform for more than 1 year, do you want to incur other costs to train the same people on another platform and make you hated even more? So my speculation is that things are on the binary now, but they just need to find a political way to digest the pill. So that's why they're breaking down the contracts. They are not giving everything straight.
Yeah.
So they need to make the public accept, leveraging on the value that is being unlocked, and the hidden part of it is we don't want to train the same people again for something that works.
Yeah, I agree with that wholly. It's like if Palantir does not get the big contract, that will, to me, mean that politics in the UK is more important than the citizens of the UK. I think that Palantir's demonstrated more than enough value to the 80 million people of the United Kingdom to allow for a great product to start implementing and showing the great strides, just like the CNBC article with Clinic Health or Cleveland Health, right? And how many efficiencies have been made, and the applications that you can build on the centralization of a lot of that data. And if they decide to go another route, it will be a step in the wrong direction, in my opinion, just based off of what I know from use of the software, what I read, the great strides that they made in Cleveland Clinic as well. And so it really would be putting politics over the people. And I really hope that they don't make that mistake. And so I hope for a fact that they have enough humility to say, let's not let politics get in the way of making sure that people don't die. And that's really what it would be if they didn't go with Palantir for the NHS.
Sorry, Matt, to interrupt you. Do you think the latest articles that have been popping out from CNBC, that was also quoted by Forbes, is a sort of advertising campaign from Palantir to help shape the image? Oh, maybe Palantir is not truly the bad guy.
Are you allowed to do that? Are you allowed to pay CNBC to do an article on you? Does that work?
I think most media works like that, but not direct insight.
Right.
Yeah.
I mean, it was. I would say it was a too positive article compared with what we were used to see. So
it was investigative journalism. It was 20 minutes. It was a really long article. So I kind of felt like they just wanted to do a deep dive, but maybe Palantir nudged them a little bit.
So or it was from an independent journalist, but maybe Palantir could support an independent journalist to make a good piece of research. But it was obviously a too good research for something that they just wake up and, let's write an article on Palantir impact on the Cleveland Clinic. It was too far. It was not something on the specific news that was triggered. It was a true research. And we know, as a matter of fact, that they don't want to make a true research on Palantir unless it is on something controversial like SPACs.
Yeah. I mean, it could go one of two ways. It could have been a sponsored contribution. It could have also been the fact that I would say, and I know a lot of other people might feel the same, but some people might think it's, going overboard. Traditional media is kind of in a tailspin at the moment, and getting on the positive side of a community like that we have with Palantir is probably only second to Tesla. And getting a community of like us on board on CNBC could be something that helps boost their numbers in the long term. And so I think CNBC has also done a good job. I forget who it is that interviews. I think it's Alex that interviews Karp a good bit, and he does a really good job interviewing him. And so I think CNBC does a pretty decent job making sure that they present both sides. It might be a little bit more positive bias than negative, but I could see your point for sure as well, Arnie. I mean, a lot of times the articles that we see come out, especially from Europe, is mostly negative, and to see something that was wholly positive without any negatives against it was kind of interesting. And I know that's why Amit, made an entire video about it and talked about it in length. And but at the end of the day, I mean, what is the true negative of Palantir and the Cleveland Clinic? Is there has there been any negatives that have been unraveled? I don't know. I'm sure there are. But at the same time, I feel like I've thought the same thing with a lot of government agencies, whether it's the DMV or everybody's trying to look after almost the same data in different ways. And there's literally no other platform better that I know of personally that I've used than Palantir's Foundry to alleviate some of those problems.
Yeah, I think the article was a phenomenal deep dive, and whether it was sponsored or not, it had so much evidence inside of it that I was just like, this is just a really good piece of work. And what it did is it proved a lot of the consulting stuff we've been arguing for a while, which is that I didn't know in 2021 they started working with Tampa Bay and Cleveland Clinic. That's what the article said. So that means for 2 years, they were doing that R&D that we talk about in terms of the FDEs going there and actually building them shit that doesn't work, them saying, hey, this doesn't work, them learning from their mistakes, and then finally building something that works, and then taking that data and then bringing it to any other healthcare institution that they work with because they know what works in the majority of cases versus what doesn't work. That, to me, that article proved the bull case for this consulting model and how it leads to a scalable network effect in the future. The question is just, can we go to market and get, the majority of hospitals in the world on our side? So that was pretty cool. I want to transition to Fedstart. This is something we haven't talked about, and I'm curious on your guys' thoughts on this. Arnie, we'll start with you on this. Palantir has introduced a product which they've had in the past, but they're kind of rebranding it, which is basically saying, look, there's a $100 billion U.S. federal government market for software. And if you want to get access to it, you need to have some level of security clearance. Most companies don't. $17 billion has been spent this year so far from VCs in defense technology companies, hardware and software. $33 billion was spent last year. So we're on pace to beat how much we spent in the private markets in terms of funding these startups, which means it seems like VCs are betting on the fact that defense spending is getting really big. Palantir has recognized that macro trend. And so it seems like they're going after startups in terms of being able to what they call containerize other products into their platforms that are IL6 certified, and then be able to use that as your selling point to the government, because there's just no way you're going to be able to get the DoD or any governmental agency to buy this stuff unless it's secure. What were your thoughts on this, Arnie? Do you think it scales? Do you think it has any revenue over the next couple of quarters, or do you think it's kind of just fluff that Palantir is putting out?
Well, many things to say. First, you are underscoring 100 billion, and 100 billion compared with the revenues Palantir is currently getting from the government, which is around 1 billion, and most of, not all of it goes to the defense, is just a hint that despite we know Palantir is building a dominant position in the software side of the DoD, the opportunity is still huge. And this Fedstart program is just another piece that confirms that it is true that Palantir sees things way before the world accept it. And we are not talking about general players, newbie players. We're talking even the VCs. The VCs were completely sleeping on the military tech, which was proven to be actually valuable. And now they are literally FOMOing into getting deals done in the sector, de facto validating the Palantir proposition, and de facto reinforcing Palantir position right now, because with this program that basically gives access to the same certifications Palantir has, as a service, Palantir can help other companies work with the government. This is beneficial not only for the entire ecosystem, because you have competing companies, but very positive for Palantir, because it is literally setting the basis for having a sort of app store that gets transactional revenues in terms of usage. So to sum up how these things work is you are a startup, a small startup that has a valuable product to work with the DoD, but facing you have the valley of death. That time where you hope something goes unlocked, but you don't receive revenues yet. And working with the government is extremely complex. On the non-defense side, you need to be FedRAMP accredited. On the DoD side, you have to be IL whatever accredited. So to work with the government, you need accreditations. Palantir has the highest accreditations possible, and they just outsource what they have as a service. By doing this, the time required for a startup to actually work with the government shrinks considerably, from 18 months to 1 week or even less, Shyam said. The cost shrinks as well. And since we are talking about startups that face the cash burn, this product can be really, really valuable. And so far, there is no other company providing that. So this is another step on building potentially a monopoly on a specific field, especially if Palantir becomes the standard. It would be very hard for another company to actually jump in. Just for reference, Snowflake just received the IL4 certification. So imagine how far we are.
Yeah, and Snowflake's a big company, and if they don't have the same clearance as Palantir yet, it seems like there's a big market for all these startups that have millions of dollars to get the clearance from Palantir.
Shyam said, in 2023, VCs have invested 17 billion in these startups. This is, to me, a gold rush into military tech.
Yep.
And
well, why do you think that's happening? Why do you think VCs, and Matt, you can chime in on this, why are VCs, they should be looking for the next Instagram. Why the hell are they looking for the next Anduril or Palantir? Because those companies aren't even big yet. They're not $100 billion companies. They don't have $1 trillion consumer market potential. So why are VCs looking into these startups?
Sorry, you mean why are VCs looking at government-focused
military tech? Yeah, I mean they should be focused on AI and all the fun stuff with that. Why are they focused on a new Anduril or a new Palantir? Because none of them have proved themselves in the public market. There is no software defense contractor that's worth $100 billion in the public markets, right? So why are VCs chasing it? Not yet, right? So do you think VCs are trying to be visionary? Do you think they're seeing what Palantir's doing? I mean, Mark Andreessen said on a conference last week, Enrique found this on Twitter, that they missed Palantir and they're kind of looking for companies in that space. So do you think because of Russia, Ukraine, China, Taiwan, and the advancements of AI, they are seeing that the government, the United States in particular, is really looking to spend to remain competitive, and they want to fund those next startups?
Yeah, so I want to finish on the Fedstart thing first, and then I do have an opinion on about what you just said as well. I think the key thing, I won't go into a lot of detail because I haven't done too much research on the Fedstart thing, but I think that the IL6 is something that's been underutilized at Palantir that I think will continue to be something that is huge. And what it really is making sure that you have the right protocols and security measures in place to be able to handle extremely confidential or even secret data. So for folks that don't necessarily understand what the IL6 piece means. And so I think that it's beautiful because it almost makes the doubtedness that people like Chris might have against how Palantir doesn't play well with others and Snowflake is a better integrator and yada, yada, yada. I think that this Fedstart piece might be the Snowflake-like integration that Chris is trying to look for. And I think it's going to help because Palantir is looking for the big problems, the big daddy problems, as Sachin might say, right? So it's something that I think Palantir is dedicating a lot of their workforce to look for things that are huge. Then you might have people that are looking for very minute sort of contracts that, you know, are focused around 1 to 2 sort of employees being able to implement something. And so instead of them being completely priced out, Palantir gets a portion of that revenue. They also have the ability to integrate, you know, directly into using their IL6 sort of protocols and help these people, one. And then two, they don't have to dedicate people to something so small. They could focus on the big problems of the big data governments like the DoD and things like that are actually going to move the dial for a company like Palantir, right? So I think it's a two-step problem that's really good. Going back towards what you were talking about with respect to VCs wanting to invest in military tech, I think that we have been very blinded and biased by the past 30 years of great globalization that has taken place, that unfortunately with the invasion of Ukraine, which I also thought potentially was going to happen in 2015 with the invasion of Crimea, is starting to unravel, right? We've kind of recognized that the friendship and partnerships that we've talked about over the past several elections here in the United States about looking through rose-colored glasses about Russia and things of the like have now unfortunately come to fruition. And I think that the investment in military tech and making sure that the West continues to win will be something that, at least for the foreseeable 5 years or so, until either we hit some sort of agreement and globalization goes back to where it was just 18 months ago, I think that there needs to be investment and acknowledgement that the only way that we can win, especially with what we've observed with Ukraine and Palantir's partnership, is through military technology and understanding that it is way more complex these days than what we've ever encountered before. And having this military technology combined with guerrilla warfare is the only way that we would be able to survive a World War III. And I don't like to think like that because, of course, I never wish war. I don't like what's going on in Ukraine either. But at the end of the day, whoever has the biggest stick and the best software is going to win. And unfortunately, right now, you know, the United States is probably that person. And I hope that we stay that way. But at the end of the day, I don't like the military industrial complex that the United States has. It's a very lose-lose situation, in my opinion. You know, I have very love-hate sort of relationship discussing like that. But I think anybody that says, I don't understand why this obsession with recent military technology probably wasn't around when they had to do nuclear fallout drills in schools, right? And so I think that that's something that maybe they aren't old enough to recognize. And I'm sure people that are 40 to 50 years old or a Vitali would probably understand this very well, coming from Eastern Europe as well. And maybe you have a better sense because the hangover from World War II is very evident in Europe. As Arnie probably knows, it's evidenced all over the place with the ruins of bombings. You know, I visited Heidelberg Castle in Germany. I visited multiple different places when I went to go visit Germany to visit family, and World War II remnants is all over the place. So, you know, the hangover of what happened from World War II until the fall of the wall in 91 is all over Europe, and I'm sure that's in the minds of some of these VCs that have been around for quite some time.
If I can just add a couple of things from what you greatly said. Two things. Anduril raised almost, they raised 1.5 billion at a valuation of around $9 billion. Anduril is a very young company, like 5 years old, something like that. Palantir is a 20-year company that literally opened the door for companies like Anduril to actually penetrate the space. And when VCs see something like that, they get noticed. So it is possible that Anduril actually triggered what's happening right now. Literally, like Nvidia now at a sustained valuation is definitely attracting transactions in chips, because the simple reasoning is if Nvidia is valued X, if Anduril is valued X, if Palantir is valued X, and I do something that in terms of sales could be sold as I'm comparable to that company. You are heavily incentivized to start to build a company, get funded. With VCs, things can be also quite fast. And the second thing is actually connected to this. In this gold rush in the military AI, we said many companies are burning, are getting funded, but this may pop up something. With Fedstart, we are talking about getting accredited in a week, in a day, and there are many startups doing that. It could be absolutely possible that this is a pure software solution that doesn't require the consultancy component, because imagine how annoying it would be for from the Palantir perspective to actually waste time on a pre-revenue startup when they have big problems to solve. So this product makes sense, in my opinion, only if it is a pure software or just, okay, in an afternoon, a forward deployment engineer comes and voila. Otherwise, it would make no sense. So maybe obviously still early. Everything that Palantir announces tends to be quite slow into actually delivering impact, because the business model works like that. But for sure, it is a good hint.
Speaking about private companies, I want to further this point. Arnie, you tweeted about Databricks, and you said, we will know when it's a top in the AI bubble when Databricks goes public. Databricks last raised at $38 billion in February 2021. Google, Amazon, and Meta, I believe, participated in their fundraising round. And they just acquired a company called Mosaic ML for $1.3 billion, which, to my understanding, is trying to be their competitor to OpenAI, not just ChatGPT, but the entire LLM market. That's why they acquired that company. So I guess two questions. Number one, any thoughts on the acquisition? And number two, why do you think it'll be an AI bubble top if they go public?
Well, I like to watch at private transactions. In the market, you have dumb money, smart money, with a general conception that hedge funds are smarter than the retail like us. But in the reality, even within the market, there is dumb money, including institutional investors and funds, and very smart money, including VCs and private equity. When things were very bad in terms of valuation, like December, we saw skyrocketing activity from private equity. Private equity are the smart buyers. Here, and venture capital are the smart sellers, meaning that VCs will push the companies to go public when they realize that the valuation is actually a bargain for them and for the company, because otherwise you are not incentivized to sell part of the company. So in order for an IPO to make sense, it needs to be done at a very high price. From a company perspective, it's like having an option. You have a call option on your company. Do you want to exercise an option when it is extremely valuable, or when nobody really cares? So all this combination of things, the interest in OpenAI, in AI in aggregate, is stimulating transactions. Everyone wants to go there, and Databricks buying Mosaic for 20x the revenues for a company that is still very early, a couple of years, gives a hint that if we start intersecting this information with Palantir, which is obviously a leader, it is obviously also intersecting the other trend we just spoke about in the defense. That means that the valuation on Palantir is relatively expensive compared with its fundamentals, but it is not overall expensive compared with a context where it is. So my speculation is Databricks is the most appealing prospective IPO for the AI software side. There is also ARM that makes a chip, so that is probably more related to Nvidia. But as we said before, in order to make a company public, what you do is checking the comparables. when the comparables are hot, meaning they have a very high multiple, you are incentivized to drop the IPO. So I speculate the market of the AI will be at a very mature phase of the interest when Databricks will do the IPO, for the simple fact that Databricks is a very good company. They have been growing while other companies were completely slashing their valuations. They just trimmed the valuation. And if they just wanted to have some money to keep running until they are fully profitable, they have that appeal that makes them keep raising money. If they make an IPO, it means that the multiple is so high that the VCs don't want to keep funding the company at that valuation. They just wanted to drop the company at a very high valuation. So empirically, what you assist is that the IPOs of the biggest companies in a trend are typically the top of that cycle. And we have a lot of examples like Robinhood perfectly timing the peak of the retail interest trading. We have Rivian with literally the top.
I put it at 150 or something. It was crazy.
I mean, 150 billion for something that was basically pre-revenue.
Yeah.
And they literally timed the highest multiple on Tesla. So you see this pattern. The reference company on top of which the company is valued, having a very high multiple. The hot IPO at the moment dropped exactly when the multiple is stupid. So I don't know when, but when and if the multiples of Palantir and Snowflake, which from my understanding are the closest comparison to Databricks, will be hot. If they will be very hot, that to me is a signal, okay, the trend, the AI trend now is very mature. Probably the good has already on our past.
Yeah, I agree. I mean, it was last valued at 38 billion. So if they were to go public right now, they'd probably be more valued at 25 billion. And if they were to go to public, I don't know. I think they're doing $1 billion in revenue or something like that. So if that's the case, it's more than a 16 times price to sale, because Palantir is doing around 2 billion, something like that, 1.9 billion. So it would be a really pricey valuation right now. So I think I agree with you. It makes a lot of sense for them to wait. And
my
then
pure speculation is they will try to get to 100. I mean,
100
well, Rivian 150 pre-revenue. Databricks actually is growing very well. It is around 1 billion run rate, growing at 60%. So it is very, very sellable. Everyone wants that in the software world. So I know it's extreme, but we don't have to think as investors. We need to think as bankers who want to maximize value and VCs who want to maximize value. So for them, since they don't have rush, unless they clearly drop a bomb, a complete scam to investors, or for them, there is no incentive to just do the transaction.
So one thing I want to talk about with Databricks, because I've had a little bit of experience with Databricks, not a lot, enough of it to really be really dangerous and have a direct comparison between the two. But obviously we use Foundry for a lot of our dynamic data that's coming in and changing almost within minutes, right? So I'm able to see something that happens 150 miles offshore and get that data within 3 to 5 minutes and be able to make decisions in kind of almost real time, right? While things are kind of going on. The thing that I've noticed, at least with how we've used Databricks within our organization at Undisclosed Oil Company, is it's more things that might be, while it's quick, it allows you to access data very quickly as well. I'd say I don't see the long-term AI capability of it. I do, but that's like I said, I don't have the in-depth knowledge or use cases of it yet. But the things that are useful are access to data that is very static. So something that might be updated once a day or once.
Do you use it daily, Matt? Like use Foundry? Do you use Databricks daily?
No.
So it's not an operating system, you would say, for you.
It's more of like an encyclopedia. That's something you might reference. At least that's how we've used it, right? So I only can speak to how we've used it with an undisclosed oil company. So it's something that, it might be an encyclopedia of data, historic data that we've acquired over the past 20 years that is kind of like not something that needs to be updated very frequently. Versus a Palantir, which is being constantly updated multiple times a second with a bunch of different data points across an entire facility. So it's very differently used, at least from my perspective at the moment. I see the advantageousness of both, especially with undisclosed oil company. At the moment, they don't really conflict each other. But I don't see us building applications as much, at least yet, right? It's very new, Databricks being involved in undisclosed oil company, but I don't see us building brand new applications and engines on top of a Databricks like we have with Foundry. And I don't know if that's just because we've been using Foundry for 5 to 6 years, and I've only really noticed Databricks being a thing over the past year with an undisclosed oil company. So I will keep a pulse on it and maybe discuss with some of my friends that are kind of part of the central team that creates a lot of the Palantir products within an undisclosed oil company, and see if there's a true strategy with both and what their thoughts are. And maybe I could relay that back if, with full disclosure of saying, hey, I'm really curious, and I've talked about this on podcasts, and they all know I do the podcast as well. So anyway, just thoughts there.
Okay, we have a big super chat, 100 Dolores. Rob, thank you for doing this. This is the second time he put 100 into the chat. Means a lot. So Arnie, when I'm in Italy, the coffee is on me. Price predictions for Palantir October through December 2023. Now, I know we all don't like to just give out a random price because obviously it could go anywhere. We have no idea. But let me add some context to this question. Let's assume Q2 is and Q3 is better than and then Q4 we'll know in 2024 how good that one went. If a Q3 is good and a Q2 is I mean, the most likely scenario is Q2 is whatever, we roll back to 11 because Q2 just can't live up to the AI premium we've gotten. And then Q3, it blows it out the water, and then we start seeing the real revenue acceleration. That's one option, which means Q3, theoretically, we could get back to 17, 18, 20. The other option is Q2 is not it's decent, which is decent enough to do a beat on revenue, beat the $4 million in net income on GAAP profitability, which means we don't tank, but we don't see this massive 40, 50% run up we saw last time. And then because we don't tank, we consolidate around 15, 16, because right now I still think 15, 16 is not safe. And then Q3 blows it out of the park. And then maybe we get into the $20 range. So I guess the broader question is, what do you think happens from Q2, Q3? And then how do you think that might affect the price? Arnie, we'll go with you, then Matt.
Well, first, the premise that I typically don't like to make this kind of predictions because making them is almost impossible. It is already extremely hard to have a hint on the direction of how things are going. For instance, you saw that almost nobody was really expecting profitability to actually be achieved so fast. We knew that it would have arrived. So we have a hint of the direction. We have a hint of how the company is actually evolving, but there are things that are on the management control, and things that are just unforeseeable. We are talking about end of year, and what could really make a difference. There are two big contracts potentially dropping. The fact that they are achieved or not makes a huge difference. What happens to the Palantir stock if the NHS deal is confirmed and Palantir gets a big chunk of it? What happens if Palantir actually achieves the Titan project? That alone, those things alone are potentially worth a +5, +10% on a price. And I agree that so far, unless something new drops, we would probably need some consolidations, like to validate that Palantir is worth at least these $14, $15. And I see kind of reasonable if things keep unlocking, meaning these contracts are achieved. Palantir shows how wrong it is the belief that Palantir will never recover. Remember, this company has been growing on average for the many years, around 25-30%. So given the business model, there is a natural tendency to getting to that model. Obviously, it is low, but if there are hints that the growth is definitely accelerating, we have hints from Carp, we have hints from Louis. We don't know when it will happen. We have hints that things are going in that direction. If the market understands, okay, this company is GAAP profitable, is reaccelerating, then the market would be very happy to pay a higher multiple, even if the numbers don't fully back the valuation in that moment. So I don't see unreasonable to be closer to 20 than we are right now. Obviously, under the conditions that the growth accelerates and some big contracts are dropped that hint that the growth can not only accelerate but also be sustained. Without those, let's be frank, if no Titan, no NHS, and growth stays exactly like we are, actually even the current valuation is not really deserved.
Yeah, I mean, I think the upgrades we got from Bank of America and Raymond James assumes implicitly growth is going to be there in Q3, or one of these contracts hits, and as a result, we can justify the premium. And so we got to see if that actually turns out. Matt, any thoughts on what you think will happen Q2, Q3, and impact on the price?
No, I think that you guys hit it on the head. I think, to me, I would say that it's a lot more pertinent about what the macroeconomic trends are showing and whether or not we're going to keep on this higher interest rate for longer sort of path, which, to be frank, isn't good for a lot of the market, but it's actually good for Palantir, knowing that they have so much cash on hand. Yeah. So, and they don't really use debt to fuel their growth so much anymore. So it's a positive and negative, but I think it'll be a drag on all stocks, which, you know, if we continue to be at a higher interest rate for longer, it'll be a drag on all stocks within the next quarter or two. And so it might bring Palantir along with it. However, that being said, I've looked at a lot of micro or small technology sort of firms that have dropped 80 to 90%, similar to what Palantir did over the past, few years. And Palantir, while some of them have experienced 100 to 200% revenue, or not revenue growth, 100 to 200% stock price growth over the past 6 months, and Palantir has done relatively well for itself as well. Palantir has been sustaining, unlike some of the others that have retraced over the past month or so, like C3 AI and SoFi and stuff of the like that have pulled back a little bit. To give an actual target, I agree with Arnie. I think if you're looking at today's valuations and forgetting what the future potential of this organization can deliver, it is overpriced. And, but if you're starting to look at what the fiscal year 2025, 2026 timeframe could bring, then I think that this is extremely undervalued. It's exactly how I look at Amazon. It's exactly how I look at Google in terms of what are they going to be bringing in the next 2 years. And that's really what's more important, valuing things 2 years ahead compared to what we're at. I think what we're going to see is a revision of guidance. I don't know if it's going to come in Q2 or Q3. Let's say, sticking with your scenario, Amit, that it comes in Q3 rather than Q2. I anticipate we're going to raise guidance for revenue to be closer to 2.3 billion, if not 2.35 billion for fiscal year 24, which then if you start to recognize and see customer growth counts go up and to the right, like I anticipate, that would inspire folks to maybe trade closer between the 17 to 18 and maybe like a $20 range by the end of the year.
Yeah.
But I think that we'll continue to see some headwinds just from a macroeconomic standpoint over the next quarter or two, until we kind of get to a place that we're out in the clear with the FOMC and starting to cut interest rates. And like I said, I don't think it's actually going to be an impact on Palantir as a company due to their financials and their strong balance sheet. But it'll be a strain on a lot of other companies that have taken the opportunity during the zero interest rate policy to load their balance sheets with debt. And so therefore the rest of the market will be depressed. And I think in the short term, and I think that that'll bring down Palantir as well, but maybe not to the extent of the others. But I'd say it's probably a $17, $18, or $20 stock by the end of the year. But I'm with you, Arnie. Short term, it's definitely overvalued. But if you look at it on today's metrics, but I like to look at things on a 2025 plus sort of basis. So
I think also if Q3, Q4, or Q2, Q3 is continuing GAAP profitability, at the end of Q3, we might see some more buying on that S&P acceleration, right? I mean, we all forget that that's one huge big catalyst. Obviously, they have to get Q4 to be profitable to match the requirements, but by then, if we know it's inevitable because the previous 3 quarters were GAAP profitable, then theoretically institutions and if inflation starts to really deck down where we think Jerome's going to cut in January, February, then that could be another catalyst that we're not expecting. And the market might go kapooey because then retail jumps in when they see it at $22. Like it could get really funny by then, but it all depends on
that. Yeah, that's kind of what I'm thinking. Not thinking like right now, but I'm like I'm in the back of my mind. I'm sitting here thinking, at what point do we go from a company that's overvalued like Tesla was in 2017, 2018 to something that's like absurdly valued?
Yeah.
Tesla is today, which is like $1 trillion company. And it's like, I was talking really well with Tevis earlier on a pod that we did. It actually went 2 hours, which was nice because I never chatted much with Tevis before. And so instead of me hitting on a podcast during SoFi Weekly, I actually had an opportunity to sit and chat with him for 2 hours. And he kind of piqued my interest in, I've never been a Tesla bear per se, but it kind of got me thinking again. It's like, is Palantir going to head along the same sort of pathway where they have so much cash on hand that they can become a conglomerate like a Tesla is trying to be, like Google is, like Apple
What do you mean by conglomerate?
Well, I vision the companies of today, like Google, Amazon, Apple, being the industrial conglomerates of the 80s, 90s, and 2000s. And what I mean by that is like GE, General Electric, was looking for any businesses that they could buy from an industrial standpoint to add to their balance sheet and do well because they were generating so much cash. So they were saying, let's do aviation, let's do lighting, let's do ovens, let's make hot tubs, let's do whatever. And now you have these software companies that have higher margins that are able to do the same. So let's get into AI, let's get into the metaverse, let's get into, and so that's all I view a lot of these companies as these days are in technology conglomerates. They're just continuing to focus on their main products, but they have these offshoots that they're trying to find to sustain the level of growth that everyone wants them to have. And so what I view Tesla as now is using that growth engine and continuing to innovate and become a technological sort of conglomerate, just like an Apple, Amazon. Otherwise, I think just the car business alone, and I don't want to make this about Tesla, but just the car business alone, while they're continuing to grow, their margins are going to shrink, and eventually the other players are going to come to town, and I think they're going to face competition. So they've made a lot of money, and they will continue to make a lot of money, but I think they have to diversify because, they were the first to market, but other people are coming to market as well now. And so I think it's going to challenge them a little bit. It's not to say that I think they're going to be impacted, but they have to look for their next thing that they could be first to market and truly make money while make hay while the sun is shining is the word I was using with Tevis. I'm not talking poorly about Tesla. I just think that other players are coming to market, and I think that it's going to hit them a little bit. And
you're basically saying you can argue Tesla's overvalued, but it doesn't fucking matter because the market is the market. So your argument is Palantir could be in that position where it is just sitting constantly at overvalued, but the market doesn't care because
that's the thing is like, are we going to be in my opinion, if you look at it today, 2x overvalued for Palantir? I think if you were to look at it and be like, what is this company actually worth today? If you were to wholesale it, and somebody were to buy it out and only focus on, and they would never get another contract or anything like that, it'd be an $8 to $10 stock. But then you think about what the potential is. And if people truly open their eyes to that, just like they did with Tesla in 2019, 2020, 2021, is this something where they start valuating at, what they have today, 3-4 years down the road, because everyone sits there and says Tesla's going to be the most valuable company in the world.
Yeah.
And it's like, well, they have to 2 to 3x from here to really be that. So people are, and that's even overvalued as it is today. So it's like, at what point is Palantir, if it does hit that, is it once it gets involved in the S&P 500? Because that was kind of the catalyst for Tesla, right? I mean, that's when it really kind of went bonkers. It was overvalued, and then once it got invited to the S&P, is when it truly started to get skyrocketing in terms of valuation. Anyway, it's just a thought. It's overvalued today, but could it be even more overvalued and have an impact like Tesla?
Well, we just said Palantir is technically overvalued given the current numbers, and here is the visual proof with that. On the x-axis, we have the combination of revenue growth plus the free cash flow margin, what's called the efficiency score of rule of 30 score. And on the left axis, we have the valuation in terms of EV multiple. So theoretically, a company should trade in line with other companies at the same level of combination of growth and margins. And we see that given the current efficiency score of 40% coming from around 20% growth, 20% margin, Palantir right now has a valuation of around 15x, which...
Can you zoom in just a little bit more, Arnie?
Okay, sorry.
Yeah, perfect.
Which tells us the market is implying with the stock rising an acceleration of that growth. So everything now gravitates towards on that key question: are there enough conditions for the revenue to keep accelerating or not? If that happens, Palantir can grow into its valuation, is fine. If not, Palantir is set to, like, if the market believes that the story of Palantir entering the military tech, the AI market doesn't, the market doesn't see that vision, doesn't accept it, then from a pure fundamental standpoint, as of today, Palantir should drop in the 8-10x range of market value. This is the valuation that Bank of America did. Basically, you value these companies based on the revenue growth, on the revenues combined with the revenue growth. So this multiple is a proxy to say, I incorporate the growth into the valuation, and Bank of America implied with an $18 per share valuation and a multiple of EV to sales to growth. So the revenue multiple divided by the growth of 0.7. So basically, Bank of America says Palantir should be worth here, while the median multiple on the industry right now is 0.4. That tells us that the valuation of Bank of America is possible, but it is already quite optimistic. If we make an inverse valuation, which was what I did here with a reverse DCF, basically, in order to get to a price of $18, you need to have an implied growth, even including the dilution, of around 25%, meaning that maybe you have Palantir growing 28% for many years while diluting around 3%. That gives us a 25% diluted growth. And you can see that this valuation is already implying a sustained valuation. Sustaining a 25% growth for many years is easier said than done, because then the more you scale, the more difficult is, in theory, to actually keep that growth. So probably here in the latest part of the growth, we will see a lot of platforms that generate a crazy amount of network effects, but we are very, very early. So to sum up, given the current numbers, it is absolutely reasonable that we will see analysts keep being skeptical, unless there is a very strong hint the revenue can keep growing.
And I think either Carp's lying or not, right? So this is a good comment. Remember what happened with Nvidia? If Carp's not bluffing about 12x inbound interest, Palantir's multiples could flip huge on one blowout quarter, instantly making the multiples better value. So that's the question. Is Carp lying about this? And I don't say that in a negative way. It's just, he said plainly a year's worth of inbound, 12 months worth of inbound is happening in 1 month. Either they're closing those deals and he's confident to say that, or he's BSing and he's just like fluffing up the amount of demand they're having. And I don't know what's the truth. I'm believing him, but obviously the numbers are going to prove it.
So I like this comment, but I think that a lot of people need to recognize it's not going to show up in the way of revenue today.
Yes.
Because it takes the time to onboard and it takes the time to truly set up Foundry. And if people are truly interested in the suite of AIP is not really a standalone product per se. It has to operate off of a Foundry, or it has to operate off of a Gotham to truly make it the most successful that it can be, at least from my kind of knowledge and experience with the product, which is very, very minimal at the moment. But I think what people need to recognize is how quickly have the customers coming through the door, how much is the customer count going to grow, and is that going to be much greater than what we've seen quarter to quarter? We've seen kind of like a very linear approach to customer growth if you look at the numbers over time, and I think we're on like the order of 380 to 400 at the moment. If we end the year,
the growth rate has declined too.
Well, the growth rate has definitely declined, but I think a lot of it is like, if you look on a linear graph, the denominator of that number continues to increase, and so they're very like linear in terms of how they're kind of going up and to the right. Are we going to have this stair step of, say, a huge quarter of, say, 30% customer growth, maybe not just this quarter, but this quarter and next, to the point where we could start to see some of those revenues come in by 2024, 2025, not in 2023. You might get a little trickle. The things that I think are truly going to move the dial in 23 are that Army deal that have kind of come around. That's like a $90 million deal for 12 months or whatever that just kind of got renegotiated last month, and a few other products and companies that have extended their deals going into 2024 as well, which I think will continue the revenue increases. And so my thought process is like, I forget what it was. It was like the revenue trajectory was like 2.15 to 2.2. Is that what it was? Or was it like 2.125 or something like that to 2.15? I think it was, either way, I thought it was a sandbag. It was only like a 5 or 10% increase year over year.
Yeah.
And I think we're going to end up something closer to 20% year over year, from 1.95, I think it was last year, to probably something closer to 2.3 to 2.4.
All right, we got another $30 super chat by Rob, again continuing to make it rain. Snowflake did partner with Nvidia, so his question is, should Palantir partner with Nvidia? I have a couple quick thoughts on this, and then I want to get you guys. I have no idea what the Snowflake partnership with Nvidia would look like. The non-skeptic in me wants to say this is a great partnership. It's a great deal. It's going to result in massive growth for Snowflake. Essentially, generative AI applications in a safe way is basically what Palantir's AIP is. They're partnering with Nvidia to give that to their commercial clients, and they have 8,000 of those clients. The skeptic in me wants to be like, why are you partnering with an AI semiconductor chips company to build generative AI applications for enterprises? I get the whole LLMs training stuff, but why do you need Nvidia for that? Palantir doesn't need AMD for that. Second of all, you acquired Neva. Why aren't you doing a press conference with Neva, which is the company you acquired to do this in the first place? Like, is Neva somehow, which Neva's, I don't even know if they've ever generated a profit. Are they going to work with Nvidia? How is this really going to work out? And then third of all, is this a conference that's just fluff to be able to tout the words generative AI? Because I watched a little bit of them talking back and forth, and a lot of it was just Frank Slootman saying, we're the best, we're going to get it done. And I'm like, well, Palantir has AIP in the market 2 months after ChatGPT. The thing was architected, designed, ready to go, and they hosted a whole fucking conference with the biggest companies in the world using it. So Arnie, any thoughts on this?
Well, I don't really like Snowflake, so obviously my opinion is quite biased. But I agree with you. It seems that Snowflake is just in search for attention, and this conference gave me that impression. Nvidia is clearly the hot cake right now, and if you go along with a hot girl, you are cool. That's the impression I had, especially from the conversation that insisted, oh, we're the best here and there. And Nvidia said, oh, you're the best. So nothing really substantial. And the fact that Snowflake is keep acquiring companies, to me, is a hint of weakness, not a hint of strength. M&A is always an option, especially when we are free cash flow. Actually, I think the beautiful thing is when you are at the point where you can build solutions that you need on your own. And it seems that is exactly what Palantir has done. Palantir has done many minor acquisitions in the past, in the very early days, but so far they're not acquiring. They need to develop a new stuff, they build it. Snowflake is getting the addiction of keep doing M&A. That is also related to what Karp said. You have these companies that after a certain point, they realize, oh, we don't really have the infrastructure to build new products. Let's keep acquiring them. The more you grow, the more incentive you have to keep growing by M&A. And M&As are not easy. Let's look at Salesforce that bought a lot of companies, and they're not really integrating them well. For instance, with Slack, they made a mistake in terms of numbers. So I don't see Snowflake in a position of true strength. It's obviously a great company, but the moves that they're making, in my opinion, tell that they are selling a vision of the company being much stronger than it currently is. Because if they need to keep acquiring companies, it means that also on the R&D side, they are not ready yet. So while for Palantir, I see that the big of the R&D has already been done, and now they need to just commercialize and focus on, we sell this thing better. We have a product, we just need to sell. With Snowflake, there is this loop of them keep searching to surf the way, and they need to create stuff on the wheel, which also from a financial standpoint, to me, is not a positive hint. Obviously, I don't know Snowflake well enough to be 100% sure with that, but that's the feeling I'm getting from what I see.
Sure. I think, well said. I think what people need to recognize is that the way that Snowflake and Palantir utilize clouds and how they partner with cloud is very different. So Snowflake, generally speaking, owns their clouds. And so, and you're paying for, when you utilize Snowflake, the cloud computing from Snowflake. So the use of an NVIDIA for Snowflake would be much more than what you would use for Palantir. And I'm not saying that Palantir wouldn't benefit from NVIDIA, but that is really up to the cloud providers that Palantir partners with, which is AWS, Google Cloud, Azure, and that is where the cloud aspect of things comes in from Palantir. They don't, and we actually talked about this a little bit earlier in the chat, is when will Palantir actually start providing their own cloud? I personally think it's a good use of the capital that they have sitting on hand, the $2 billion that is just sitting there. I think it could be an opportunity for them. That could be something that I think maybe that they're waiting for in the future, or maybe not at all. Maybe they think that that's not what we're in business for. We're in business for solving big problems. So we're not in business of solving people's computing problems. We'll use AWS and Google Cloud for that. So to answer your question, I don't think that NVIDIA would have a partnership from a hardware perspective like you think would be going on with Snowflake, because Snowflake actually owns their cloud and their computing engines. And that's how a lot of Snowflake's money is made, versus Palantir is mostly focused on, they do a little bit of they allow you to use your own cloud, which is nice because you don't have to move clouds, which is always a pain in the butt. But they're more so focused on the actual deployment of the analytics piece and utilizing other people's engines to truly make that work. And so maybe that helps clarify your question. But first and foremost, thank you for the $100 super chat earlier, and then $30 super chat right then. I think that that's really helpful. And I think hopefully me answering that question alleviates some people's thoughts and preconceived notions about how Palantir uses cloud as well.
Sorry to interrupt. Wasn't it true that Palantir was already partnering with Nvidia on the Titan project? I have this thought. Like I remember this. I'm not finding the evidence. If you have some hints, please share.
I wouldn't be surprised. I mean, that's physical, right? So I could see that they'd be partnering when it's a physical piece, right? So that is true. I didn't really think about the SkyKit piece and also the Titan piece, which is kind of like edge related sort of material. The way I was thinking about it more so was like enterprise in big companies. So you could be right there, 100%, Arnie. That's a really good point.
Okay. Last topic for the night. This one's a quick one, but it'll be fun because we got to address it. Arnie brought it up. Lilium is up very nicely, which is one of our Palantir SPACs over the year. And apparently Arnie found out that we tripled down on our investment in Lilium. So instead of having 400,000 shares, we now have, 1 million shares? Something, or we have 1.4 million shares. So we have a lot of shares. Arnie, can you give us some context for why we're doing this?
First, I have to say thanks, Emir, for having helped the analytics of this, because with SPACs, I don't really track these numbers. I just noticed that Lilium popped, but why Lilium popped? Because basically, Joby, the competitor, is getting one step closer to the commercialization. They proved basically that their tech works, and Joby is another Lilium that is receiving more attention than Lilium. So it is just a nice hint that at least we saw Palantir doing a good capital allocation in doubling down on
the stock's $1. They spent $1 million or whatever, right, to get those shares.
Yeah.
So not bad.
I mean, considering that they're still hugely down on the overall stuff, I would say better to cut losses on things they don't really believe on and to have the concentration in one that at least is showing big signs. Obviously, that doesn't make an impact, but I think it is truly important that at least one of these 20 companies succeeds. My speculations before were for Wejo, Black Sky, and Lilium. Wejo, unfortunately, is out of the game. Black Sky, right now, I don't remember if the shares are still there. I think they sold, but that was the one among the three that I would have bet on.
Matt, any thoughts on Lilium, or it's kind of just a fun little game Palantir is playing with?
No, I mean, that was always the bet, right? I think a lot of people needed to recognize that a lot of this was very speculative pieces. And to me, it was more of an experiment in providing operating systems for experimental technologies that could be truly foundational going forward. And they're doing it for Tritium, which is still an active company and is continuing to make deals as of Q1. They actually made a deal with undisclosed oil company. So if you're curious, maybe you could actually find out who I work for or just listen to Sachin speak because he always talks about it. And then they also have like Black Sky, like you mentioned, they are still publicly traded as well. And they collaborate very extensively with another speculative company that I own, which is Rocket Lab. And Black Sky's continue to do great things. And I've always kind of acknowledged that it was a very long-term bet. And I think that that's something that should continue for Palantir, especially with 2.8 billion on hand. They should find companies and continue to work with them. I thought it was a very brilliant deal personally to do the SPACs. I still think that people give them way too much hate for it. I think it's something that they should continue, maybe not necessarily at the pace at which they were doing it. But finding underground companies that are very speculative is the same thing that we're doing here today, right? I mean, a lot of people 2 years ago would have thought that what we're doing with Palantir was the same exact thing. And they could have said, you know, oh, look at you, the stock's down at $5. And now look where we are today. We've tripled the value and are continuing to build and now are GAAP profitable. So it takes vision and long-term thinking to truly make investments like that. And to sort through the noise. And yeah, some of them will fail, but you'll be a part of something that's much greater than one of us, alone, if you think in that sort of mindset. And I thought it was very forward thinking of Palantir to do that. And honestly, I'm pretty upset that they stopped investing in small companies like this, because I think it's something that could continue to be a good route for them. One, because that is how their company is built, is focusing on aerial market share across a multitude of different industries and helping people solve big problems. What better way than to be on the forefront of technology and forefront of industry, like they were with Wejo, like they were with Black Sky and Tritium, and as well as Lilium, right? So I think it's something that I hope that they get back to. Maybe they haven't been focusing on it as much because of what Wall Street was saying. And unfortunately, they're a publicly owned company to an extent. And they're focusing now on the profitability piece. Now that maybe once they get enough of a runway to get profitability, they could focus a portion of those profits and cash flow back to doing what they were doing. And I anticipate that in the long term, if they continue to have this capital firm, just like Undisclosed Oil Company has, just like Google, just like Amazon, just like Apple has these venture capital firms, in the long term, they will find something that could add a lot of not only value to the underlying book value of Palantir, but also from an operating system perspective, have use cases as well as have an ability to grow revenue for the main business as well. And so that's just my thought. And, I maybe you think I'm an idiot for thinking that the SPAC deals were, something that was useful, but I still think that that's something that we should continue to use as a company going forward. It might be short-term ROI negative, and a lot of people might be thinking too much like that. And I think that that's probably why they did pause that, coupled with the SPAC craze on its own. But doing it diligently at a controlled pace and setting aside, say, $100 million a year to invest in something, I think will in the long term pay huge dividends.
I'm absolutely aligned. It is not the idea of the SPACs being bad per se. It was the execution. Basically, Palantir went FOMOing into SPACs. It was too much done too fast and at valuations that didn't really make sense. But the picture I was showing is this is Joby, the company that is competing effectively with Lilium, which is getting more visibility, but it is still good for Lilium because the idea of an electric vehicle just taking off, flying vertically, is something that is difficult to accept. Probably will take at least 10 years to actually see them in action. But this was a SPAC. So we have a SPAC exceeding the initial
Wait, Joby was a SPAC? I didn't know Joby was a SPAC. Oh, wow.
And why that happened, I checked. Joby's shares surged after receiving US regulatory approval to expand the testing of its air taxi, marking one step toward building a business around electric vehicle-powered vehicles. So there is a regulation approval that also impacted Lilium. So great. Like, we have a vision. We have the company helped by Palantir. And what's interesting is that if people start seeing this thing is not only futuristic, but there is already a regulatory environment. There are already having sponsors like Lilium had a partnership with NetJets to actually build jets for them. So when the market starts seeing these hints that is not just a vision, like we conquer Mars, but there are actually true hints that there are money that could be made from this opportunity, then the valuations are sustained, they can raise more capital going forward, and they can let the snowball rolling. Especially right now that there is a lot of mistrust in the small companies like SPACs and so on. So
yeah, and Lilium secured a deal in China where they're going to be part of this area that has 85 million people, where they're really developing the jets to have like a regional kind of hub there. And so that's also, I think, what's getting more of the institutional side excited that, look, if speaking qualitatively about this, if electric jets become a thing, going from San Francisco to LA or New Jersey to New York or Shanghai to Beijing in a matter of 20-30 minutes versus 3-4 hours driving, it's like, and it's electric, so there's no carbon gas.
The problem is real.
Yeah, it's a real problem.
There's a lot. Just Houston to Dallas is a very popular flight, and it's an hour. You think about it, if you're able to have a smaller dedicated airport specifically to go from Houston to Dallas, it might speed things up, because think about it, you have to check in, you have to check your luggage, it ends up being a 3-4 hour ordeal to get to Dallas. Yeah. When if you do something a little bit more efficient, it could be something that's only an hour, and much more focused, right? It gets you to a point where you're not doing something to go from here to 1,500 miles away. You're kind of an intermediary between the train and what have you. But I think a lot of people don't still talk about a lot of the SPACs as well. Like Rigetti is something that could be huge as well. Quantum computing, I think, is still in its infancy and can do really, really well in the long term. And so, I think that there's more to be said about the potential of continuing to invest in this space. But I've had some people reach out to me about Joby. And I'm also curious if that's something that's eventually going to take off.
Kathy owns that stock.
Would you fly on it?
I probably wouldn't fit, and I'd probably weigh it down pretty extensively. But I don't know. And I was talking about this with Tevis the other day. It's like I've been very convicted. I've consolidated a lot of plays recently, and consolidated and mostly focused on a speculative nature in Palantir and Rocket Lab. And him and I were chatting, and I was just like, you know what? Like, with all these other companies that are truly coming out that are revolutionary, that will move, it's like I do still believe in Rocket Lab. I still do believe in Palantir. But is there something from a graphics perspective or super futuristic that could be something that's a 50x that's right in front of my face? But I'm so focused on Palantir and Rocket Lab. And so I promised him that, one, I'd probably take another look at Tesla. And potentially look at that one, specifically focusing on their long-term different bets, and then also looking at something, not a Joby, but something like a Joby that is very futuristic looking and is pre-revenue, and something that, because where I was basically getting to was like Rocket Lab and Palantir have now moved into a space where they're less speculative than they once were. They're now actually becoming full-fledged companies. Palantir is profitable, free cash flow positive. Rocket Lab has 10 quarters worth of profitability. They have a sustained cadence going, and they're going to continue to be profitable, or they're going to be profitable within the next year or two. And so you could see those sort of things happening. I need to look now into something that is truly speculative, whether it's a Joby or a Lilium or something like that I can sink my teeth into and have this like big Hail Mary bet. And I need to look, get a third position that is very speculative as these ones become more true long-term holds and stocks, not necessarily speculative positions anymore.
Yeah, and for the people that don't invest in Lilium, as long as Palantir, well, it seems like Palantir will keep their equity. Palantir is exposure to Lilium, right? So you kind of get your exposure to a more spec play with Palantir.
Yeah, and it's a double benefit too, right? Because they own the equity piece, which is going to be mark to market. So if Lilium spikes tomorrow, that'll be a big up to, say, the revenue or the net income kind of coming from the company, coupled with, if Lilium continues to expand, they get the revenue generation just specifically from using Foundry as an operating system, which was part of the deal.
Yep.
And so it's a double whammy in a positive sense to the bottom line.
Agreed. All right, that's it for us, everybody. Please, 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 before you go, Arnie and Matt and Mai's Twitter is in the description. Please make sure you follow us on Twitter. That we would really, really appreciate it from you guys. If you don't have a Twitter, sign up and follow us there. There's a big pound.
Why wasn't it Hot Shirt Friday? You were chatting up hot shirts in the morning calls, but Arnie showed up early. Why couldn't you look nice and presentable?
Well, I was wearing it for a long time during the day. I was like, you know what? I just need to. Well, it's actually hot. It's 87 degrees, so I went outside today, and it's pretty hot. So just wore the sweatshirt. But yeah, probably next week I should wear the
No, I'm
If,
just kidding. I'm just kidding.
if you follow me on Twitter, you can see the shirts that I just ordered that look pretty nice. Dress
You
shirts
inspired me because I've been like, probably people wear like Matt always wears the same 3 shirts probably in the podcast. And it's like, I normally shop very rarely, but like I'll wear shirts until they get holes in the armpits. And then I'm like, well, I can't wear this to work anymore. So, or like holes in the elbows or something like that. So you inspired me to order some new shirts. So hopefully people don't think that I only own 2 shirts anymore. It's just the fact that I like these 3 shirts that I wear the most. And I don't like the other ones.
With all
Arnie's
these
perspective was
shirts,
interesting. Go ahead, Arnie.
is Palantir Weekly becoming so serious?
I just know I said I feel good in the shirts, but Arnie's perspective was good because he worked on Wall Street, or like the Italian version of Wall Street, and he said he felt like shit wearing those shirts every day because his life had no purpose or meaning. He was just looking at numbers all day. So it's totally 2 different perspectives. I feel great. You're like, bro, it reminds me of the past.
Slavery.
Yeah.
Hey, I respect both, right? I've seen some extremely wealthy people show up driving Lamborghinis to the job site, getting out, and they're like, and people treat them like crap. And then I see people, wearing suits and they just like to feel that way. I personally, when I'm at home, I like to dress very casually. But when I'm talking to people, I think maybe it's just the things that was instilled in me growing up is like when you're doing something with business or work, you try to show up presentable. And I feel that's just how I feel. I like to show up well. This is a suit jacket that I wore to a business meeting yesterday, and so, a business lunch rather. And so I'd like to just show up. It makes me feel comfortable, it makes me feel confident. And it's kind of like that extra layer of like warmth around you, that placenta, if you will, if we want to get real deep into it. And it makes you feel, makes me feel personally cool, calm, and collected. But I completely understand, my one buddy, he's a very successful individual. He wears sweatpants all the time. And, he's in and out of job sites and in the construction world, and nobody says a damn word because he's killing it and he does a great job and he's comfortable in those things. He's also very athletic as well. And so he'll go straight from, say, the job site to the gym. So it all just depends on people's lifestyles, but it is what it is.
By the way, speaking of that last word, placenta, Palantir invested in a company called Cellularity that has an innovative approach to cell therapy, harnesses the unique therapeutic potential locked within the postpartum placenta. That's a company a lot of people forget about. Cellularity, it's a SPAC. I think they're still public, but that's like a drug discovery kind of play. It's like that's like a real, random bet.
That's what I'm saying. Like they're not investing in like a SPAC about Coca-Cola or like a fast food. It's like they have other companies that they can work with and partner with that they can get those revenues from, like a Whataburger, McDonald's, what have you, to help make those sort of changes if that's an area of expertise that they want to get into. Versus like these other things that they're investing in are very far-fetched, very far along ideas, something that might take 10 to 20 years before you really start to see something move.
Well, it is true that being on the boards, well, not on the board, but already having one step in, they are effectively in the position where if they want to double down, triple down on a company where they see true potential, they can do it at basically at a price that is almost zero for many. So it is a privileged position. They could exploit it effectively, even with risk-free interest money, just taking the interest risk-free and putting that into more speculative bets would not be a bad idea. With how much cash now? I forget, 3 billion, you receive a 5% on it. That's 150 million per year they could potentially throw away and just reinvest in very speculative stuff.
Agreed.
That's a good thought, man. I didn't think about that.
All right, guys. Thank you for joining us. Enjoy the July 4th weekend for those who celebrate, and we'll see you back next Friday.
Thank you.
Bye, everybody.